set to go. I don't see the participants on my end. I don't know why. I don't know why that is, but I just see you and me, Dwight. I don't see the names of the people.
All right, so if you go to participants, there should be two lists. One you see panelists, and you should see attendee at the top right.
There you go. There you go. Man, I'm just technology impaired.
No problem.
So just I won't call out everybody individually. Take too long. Hey, Joe Stevenson, haven't seen you in a while. Hope you are well. It's kind of just. All right, so why don't I kind of open it up. So welcome to today's webinar. This is the third of a 4-day live trade execution webinar series subtitled How to Capitalize on Monster Moves in the Markets. My name is Mark Shawson, the pattern trader. I've been talking for the last couple of days about my price action, price pattern, trading methodology. I'll put that work. Well, actually, no, I won't. At the end, I'm going to give you an offer to buy my book for Pay What You Want. And it basically encapsulates everything that we talk about here, which is my whole philosophy is that the markets are a discounting mechanism. The markets are ahead of the news. Yesterday, I was saying that you should buy Alibaba. Today, Alibaba was up $5. I don't know what that represented in percentage. It was up 4% today, just today. The news out of China is horrible. They're in lockdown. Their GDP is contracting. Their biggest real estate companies in bankruptcy. And so, if you read the news, that's not how you make money in the markets. The markets are a forward-looking mechanism. The markets look a week, a month, 9 months down the road. And if you're trying to digest what's happening now, you're way behind what's really going on. And so, I don't try and play armchair, economist. I don't try and second guess what Jerome Powell said, what the implications of what he said, where I think inflation is going to go. I try and blot all of that out and just look at what the market is telling me. And, yesterday I said, you should load up and buy BABA, and it's up 4% today. So, anybody buy BABA yesterday based on the discussion? Anybody on the webinar? So Jason says he bought BABA. Dale, Holger. So anybody else buy the stock of Alibaba? Johan said yes. Dean says yes. Kenny, Eddie, Mitchell, Roy, Jan. Duncan said yes. So I guess you paid back the price of admission for this webinar then. So you should have made some money on that. And Maria said yes. Stephen said yes on his demo. That's fine, just to get a feel for things. Nothing wrong with that. So I'll kind of walk you through, what I've been doing. The first day I was buying JD calls, at $1. Ended up blowing them out for over $4, made 400% of my money. They ended up going a lot higher. My FX positions have gone slightly south. I've been in the pound New Zealand and it went lower today, but that's the way it goes. These are my stock positions yesterday, where I had 7,500 shares of Alibaba at 132. It closed today at 137.30. So I made about $35,000 on that position, and then I had 3,000 another. So collectively, I made about 50 grand today. I made $180,000 yesterday on my JD call. So a couple of good days in the China-based stocks. So you can see here, I had 3,000 shares at 132 yesterday. Today closed at 137. I basically blew out a lot of these Uber calls and stock today. I just think that the market's going to start going a little bit lower. So I'm just kind of blowing out everything and what have you. And I'll talk about that in a minute. Yes, these were the JD calls yesterday. I bought for $1, blew out for $4, and made collectively about 190,000 there. Then I had these this BABA position. As of today, you can see it was priced there. I was making 15 grand in this account and about 35,000 in another. So altogether, pretty decent day. Here was the Alibaba position priced at almost 137 with 7,500 shares. So you can see I put about 1.3 million into that position. So I wasn't kidding around. When I like something, I kind of go for it. And it's all based on price action. So there's no inside, I don't know what Mao is doing or Xi or whatever the prime minister is doing. And here are my FX positions today. So all in the pound New Zealand, gone slightly backwards, but I think it's just a hiccup. And so I'll just kind of break apart what happened in BABA and then kind of look at some other things that I'm kind of looking at here. So again, everything is based exclusively on the analysis of what I call a clean or a naked chart, right? So there is no volume here. There's no moving averages. There's no MACD. There's nothing on this chart but price and time. That's why I call this a clean or a naked chart, because it's got nothing on it except price and time. And from this very simple picture, you can see, so this was my setup today, for the elite traders in Roku, laying out why I think this is a short, all of these bear price patterns, the key reversal today. I'll talk a little bit about that. And so this is kind of what I send out on a daily basis to our elite traders. So I was just sending that out before the webinar started. So this is BABA. We were looking at BABA yesterday when you can see that yesterday was just kind of in this coil. And then today we just gapped higher magically out of nowhere. How did that happen? What a surprise. Not really. Don't want to sound arrogant, but I was looking at that bouncing based simply on a price pattern, a double bottom price pattern. And a double bottom is exactly what it sounds like. Makes a low, bounces off the low, makes another low, and now we have this W pattern. And so very difficult to kind of look at all of the information that is coming to us. Inflation, is it transitory? Is it real? How hard is the Federal Reserve going to try and put the fire out? What do higher interest rates mean? What's going on in China? Makes your head spin. So I try and look at a picture and then try and set up risk reward parameters, meaning that, I bought right at the market close yesterday around the 132 on the basis that this was going to be my risk. And I thought I had a lot more reward, based on this pattern. So this is what we saw, the double bottom. And then when it kind of goes above this neckline, it then confirms what we're looking at. So sometimes you see these bottoms all the time and you get these fake outs and you don't know if it's real or not. And when it breaks above the neckline, so sometimes you can get a re-challenge of the neckline and then it can do all kinds of things. But this does look real. So we had a gap today, closed, here, and it looks like, this thing is just going to go higher, despite the fact that I think that the stock market now is pretty much, had a run, and I think it's going to go lower. So I start buying some puts on the close. Puts are a bet on the downside on the stock market. So Frank says, do I have a price target? Not really. I just kind of look at how, prices go. And then if it, starts giving me a look where, it looks tired, then, I'll get out, let it come back, then I'll get back on. So I try not to put price targets. What I do when I send out my emails, I'll put a target, way, way away. And then I'll see what I want to do is I want to see, when I put my buy on here, does the market, does it respond? I mean, if it went down today, then, it would have violated, my expectations. So, sometimes I'll look at a chart, then I have it's then, what I've learned to do instead of putting on, just a, just having an opinion. An opinion is a dangerous thing. So what I do is I put a structure, I draw this double bottom, maybe it is, maybe it isn't. And then I look at how does the market respond to what I'm looking at. And right now, the market seems to be confirming what I was looking at, that, I was looking at this thing correctly. And if the market keeps confirming, then, I figured that I'll be onto the right trail. These lines are pretty arbitrary, but I feel like this has got at least space, to come back to this downtrend line about 150 before it, has its next, hiccup here. So, and I think it has a chance to go a lot higher. But it's just a tricky kind of holding two thoughts in my mind, because on one hand, I think the Chinese stocks have bottomed. On the other hand, I think the NASDAQ is about to roll again. So, you just got to look at each instrument unto itself. And, if it goes down tomorrow, I'll just, get out. So I look at each pattern, each setup, on the integrity of that trade. So, I don't look at correlations. I don't look if oil's going up, do I buy the Canadian dollar? If the dollar's going down, do I sell gold? I don't. I look at each instrument and I look at the risk reward calculation on each instrument. Do you still hold on to your BABA position? Yes, I do. I have. All right. So that's, I've gone through BABA, why I bought it yesterday. You can see the follow through here and, on and on. So now, we've had a pretty good thrust in the, the stock market, principally the NASDAQ. And the question is, where does it go from here? And, it's an open question. This is, it's very tricky. You've got these very large ranges. And this is where, like something like BABA, where it gets into that very tight coil, I have a very high internal security or feeling that I know where I'm getting in. Whereas this, literally in the middle of the tennis court, which if you don't play tennis, in tennis, you either want to be at the baseline or at the net. You don't want to be in the middle. And so this is squarely in the middle of a support and resistance. And, now, you're trying to handicap what is the next direction. And I kind of feel like we're going to go back down. And I think that because, buried in here is this head and shoulders. So to me, this is a bear price pattern. And you can see that we basically come to this breakout area. And I just feel maybe, so the indexes are a completely different thing. The indexes have been going up and making, we're not too far from all-time highs, whereas, all kinds of stocks are 70, 80% off its highs. So the indexes haven't been the best way to play the market. I have not been playing the indexes. I've been playing individual stocks. But I kind of get the feeling that, we've kind of hit an upside max and, we're going to come up, although there wasn't a reversal. There's no real clear path to come down. So, not a great trade. But, I'm looking at individual stocks. Like today, I sent out a trade on Roku. And you can see the markets are at all-time highs. And you can see stocks like Roku are way off their highs. So you can see Roku topped out at $500 and it's, 60% lower. And, still going to go lower. So I don't think the trash end of the market is done going down. Even though the indexes are going up, it's because Apple and Microsoft are going up. But the trash like the ARK Fund and Roku, so you can see this huge double top. Looks like an M top. That tells you that that's done. And by and large, this thing will go lower. Now, not to say that you can't have all kinds of rallies, but, I think eventually you're going to look something like that. And so I think based on today's price action on the daily, you had this kind of washout. You kind of went higher. So I look at what I call these insurance day bars, like, these reversal bars where early in the day, we made a new high and we closed on the low in a market that's going lower, that has all kinds of bear price patterns. So you see the head and shoulders here with the drooping neckline. And what I mean by drooping neckline is you can see it's a down sloping. So you can see that head and shoulders, and with the drooping neckline, it implies that it's going to go down quickly. And that's exactly what it did. So these patterns, and then you see another head and shoulders here. You see the rounding top here. So the collection of patterns, the trend tells you that this is going to go a lot lower. Now you have a key reversal today, meaning that the energy is now ready to probably pick up to the downside. So I think all of these garbage stocks, like, DocuSign and Beyond Meat, and Zoom and Peloton and all the stuff that I've been saying since last February, you can, sell despite the fact the indexes have been going to all-time new highs. So it's been this kind of masking effect where the indexes, which mainly comprise, the big caps, Amazon, Apple, Microsoft, those are multi-trillion-dollar companies that have real earnings and are real companies, whereas these have, no earnings that are discounted well into the future. And when interest rates go higher, when you don't have any earnings, you get punished. And that's exactly what's happening here. So you're just getting all these stocks. I also bought puts in Roblox today. They were pretty expensive, but I figured I think it's just going to go down. So I paid up and we'll see what happens. This is Roblox. It's this metaverse company, whatever you want to call it. So to me, Roblox has put on a series of bear patterns. You've had this, what I call a dead cat bounce. I don't want to insult any pet owners, but dead cat bounce is just trading parlance for bounce that's not going to last, that has no legs. And I think you're looking at that on Roblox, where it's likely to turn lower from here. So Roblox put on this nice looking double top here. Again, just looks like an M top. So these patterns kind of tell us, once this thing's top, cut through the net line, what the trajectory is. And that's exactly what happened. So I just look at these patterns, and then if you dig within the patterns, I see this price action. You made a new high, close on the low, made a new high, close on the low. So those key reversals, tell us. Now you had another double top in this pattern. And now you basically have rallied back to the breakout area. And I do think that, now you have this, what I call an inside day bar, this coil. And so the way I would do it is basically just put a sell stop under today to get short. And, if it goes higher, then you're not put into it. On the other hand, if it comes and picks you up, it's likely to kind of go down and make a new low. And I do think, if not tomorrow, over the course of the next couple of days, you will start seeing this thing start picking up steam to the downside. Anna says, how do you calculate position size for stocks? All right, so if, let's say Roblox is $90 here, right? It's trading at $90. You want to short it, and you want to give your risk till, let's say here, 95, a little bit above this neckline, give it some room. And so your risk is $5, right? Everyone understand that? To 95. You're going to give this, if it goes to 95, you're going to get stopped out. So your risk is $5. So let's say you have a $5,000 account, just to keep everything simple, and you want to risk 1% on this trade. So 1% of 5,000, my math's pretty bad, but I think it's $50, right? So now you want to risk a total of $50 on this trade. You need to give it $5 room. So that means that you can short how many? 10 shares, right? Does everyone kind of understand that? So 10 shares times $5. Let's say you get stopped out, you'll lose $50. And then $50 represents 1% of your account. If you have 10,000, you can do 100 shares, etc. So Chi says, does the insurance day bar, does the color matter? No, not really. I just look at this as an inside day bar. I don't care if it's blue or green. So to me, the range today was inside the previous day. So to me, what this says, this kind of went up and now it couldn't go higher today. It kind of, stopped here. And then today it stopped there. So it's like pushing on this upside. They couldn't get it further. So, I think that it's likely to go the other way. So everybody get that insurance that, Ina, did you understand how to calculate your risk based on that? Javad says trends differ in different time. Which one should we consider? So I toggle back and forth. The idea is what I'm trying to assess is, I'm trying to take a piece out of the middle of these moves, right? So when, things moving directionally, I'm trying to, take a piece out of the middle. Sometimes I get in at the, beginning and get out the end and what have you. But, if you can just take a piece out in the middle of large moves, that's really what you want. So sometimes I can just look at this. So this daily basically tells me everything I want to look at. Sometimes the different time frames give you a different look, so the weekly is more muddled. First off, Roblox doesn't have a lot of history because it's it's a new issue. This is a little bit subtle. When you look at the weekly, these bars are, first off, what I notice, when something makes a new high or low, I notice, I try and what stands out to me is the price action. So you can see in this week, it opened right there. It opened at the high of the week, but by the end of the week, we closed closer to the low. We closed on the low. So this thing made a new high, but by the end of the week, the sellers were in control. And then the same thing happened in the next week. Made a new high, close on the low. So, these two guys tell me that it's a double top right here. It's a failure. You try and take it up, and both times it closed on the low. So it's a little bit subtle, but I was already, and then the daily made that more clear. So sometimes different time frames make things more clear. Typically, the more time, it's better to look at a bigger time frame. Since this is a pretty new issue, it's pretty compressed. It's a little bit more difficult to kind of figure out, but you can see here's one top and here's another. So you kind of have this asymmetrical. So, the tops are not in the same place, but to my mind, this is still, I'm always searching for a color, a double top. You make a top, you make another top. Now, basically, you've made a top. And then you came through the neckline. Typically, you get a retreat, you get a retest of the neckline, and then it goes again. And so, this doesn't have a lot of history. So the weekly is a little bit more muddled, and the daily in this case really is kind of more clear to me. I can see the double top and these bars much clearer. And again, a lot of people say, well, I use candlesticks. Not too many people use bar charts, but maybe I know I'm a fossil, a dinosaur. I've been doing the certain thing the same way, but for me, visually, when I open this chart, my eye immediately goes to these two guys right here. I immediately, as I open this up, I see this made a new high, close on the low, made a new high, close on the low, and then I know what's going on here. You have those very large ranges, and then that very negative price action, and I don't need to know anything more than that. And then you can see right here, same thing, made new high, close on the low. So, I just see what I try and focus on. How did something close relative to the high and low? And so I would say you can't trade, these reversals in a vacuum. There was a key reversal here. And that doesn't automatically mean that, you could have gotten long off this and made a few bucks, but, pretty soon it was right back in your face because these were the dominating guys. So what I try and do on any chart is I try and say to myself, what is the governing price pattern? What is the price pattern that is going to govern or dictate, the trajectory of this thing going well into the future? And this double top is the pattern. So this reversal was just a fake out, and it was just going to go right back because these guys were telling you what was really happening. And so I just see these reversals very clearly at the bottom or top. And then sometimes you get a short-term bottom where you make a new low, close on the high, and you get a bit of a, follow through there. But I would not play this because I think, it could be right back in your face very quickly. So you can't just look at these reversals in a vacuum. You've got to look at it in context with the trend, the governing pattern, etc. And to me, you have another secondary double top right here. You had the neckline here. And so it's entirely possible that, we kind of retest this thing, but, eventually this thing will go lower. So Neil says, I'm loving this explanation. So a lot of people asking about Tesla. I'll look at Tesla in a minute. So I just really what I'm trying to do in all these sessions, we can look at, many, many things, but really what I'm trying to do is reinforce a methodology, because I apply the same analysis to whatever I look at. If I open up a Tesla chart or a wheat chart or a natural gas chart or a gold chart, I look at the same things: pattern, price action, trade setup, risk and reward. And this is, the concepts that I'm trying to, get across in these things. So, I don't want to, get these requests to look at thousands and thousands of things. The idea is to really understand, certain principles, and then you can take these principles and apply them across the board. Shanir says, how do you know when the downtrend is finished? Look, so if I see, a double top, it doesn't just, end here with, is this a double bottom? So, there's a top and a bottom. If a market's topped, it is going to go down for a long time. And typically, and I sent out that scientifically thing, we looked at these things, and it's they tested 35,000 trades. And when you see a pattern, it goes directionally at least for 100 days in one way or another. So once you understand, that this is breaking, you can get short and stay short for 100 days. I don't know how much this has been, but that's 3 months. And so I think, this is not done going down. So the market, to my mind, puts you in and takes you out. So there are times where you get in according to a pattern, then the market goes down, down, down. And then you might see, a pattern here where you say, okay, I'm going to get out, or you see some key reversals that suggest that, hey, this is a short-term bottom or what have you. So I let the market tell me, when, I need to get out. Moss says, do you send your trades through to your students with enough time for them to take? So the whole principle of my thing is, set and forget, right? So this was my email yesterday, right? If you just got this email, if you were on my LEAP program, I said buy it at 134, and today it's at 137. Right, and I'm already long at 120.97. So it's really a set and forget. You get this email, you put your buy stop at 134, and you go to work. And so it's very easy. And I've already been long since 121. So right now I'm making $16 on the position that I sent out on January 4th. You can see here it was, I sent out a position at 120.97. Yesterday's 132.20. Today it's 137.20. So you would be up $16 on that position. And so, yes, this goes out after the market every day. You have time to enter it the next day, and away you go. So I have a couple of pound New Zealand positions on. I was long Uber stock, and collectively I'm up 2,000 pips, and I basically use these stock prices in pips. Obviously 1,123 pips in stock is $11.23. I just try and equate it. So yes, I send out all of these trades ahead of the market, and so you have plenty of time to enter them. Dean says, could I stay in BABA for 100 days? Probably likely. How does pound New Zealand look? Pound New Zealand had a hiccup today, which is entirely feasible because it's right at this resistance level. So you can see we kind of came off, and if you look at the weekly, this is a pretty logical place for it to kind of have a rest. So this is, again, where you see this key reversal, made a new high, close on the low, but I wouldn't short that. You may get some price. So this is obviously a key area of resistance. So whenever the market bumps into a level that it's sold off from, it's very often that it. And so what I look at now and I say, okay, it's entirely possible this key reversal leads to a massive decline, and can't ever rule anything out. And so what I still believe that this thing goes higher. I still believe that collectively there are all these bull price patterns. This is just taking a rest, where it should, right in this resistance level. But now I look and see how does the market behave. So you see this reversal where it made a new high, close on the low. And, look, if it starts, doing something like this, that's going to kind of change, the equation of how I'm looking at this thing. On the other hand, if we go lower tomorrow and then, kind of do something like that, and we start, collecting it, then I will just add to my position actually. So I'm just expecting some kind of consolidation in here, some kind of backing and filling, and eventually something like that. But, if we start rolling over, it's a whole different thing, but I don't think so. To me, you have to trust the patterns, and sometimes it gets really hard. These ranges are very big. This is why I say, you can't trade FX with a 10 pip stop. I use 300 pip stop losses sometimes in pound New Zealand just to give it the room that it needs to, roam all over the place. But to me, this is the pattern, that double bottom. So you kind of have what's called an even atom double bottom. This whole thing looks like a huge base to me. So to my mind, the bigger the base, the more likely into space. This is a resistance, level here. You can see there are several areas of resistance. And so this is what the markets do. They get to formidable areas, they kind of collect themselves, and then, I'll see how we put ourselves together here. And it's still my expectation that we go higher. So to me, these dips, are, buying opportunities. If this thing came off another 100 pips tomorrow, I'd probably just arbitrarily just buy into that based on this thing. And this thing's gone up very far, very fast, just needs looks. So look, you could just pull back to this uptrend line, which is, the low 198. So this thing could still come up 150 pips. And to me, that would be a great buying opportunity. Peter says, love that. The bigger the base, the higher into space. Yep. Eduardo says, is the weekly a better time frame to trade the FX market? So it certainly gives you, so by looking at these higher time frames, what it does is it slows the market down, right? Instead of looking at 5-minute charts, which, if you looked at the pound New Zealand on a 5-minute chart, it would look like a carnival ride, up 300, down 600, up 300. And, that's where your emotions, you can't humanly contain those emotions. But if you look at how controlled these are, and these are, probably 300, pip ranges, but, when you look at it on a longer time frame, it looks more controlled, it looks more orderly. So you can, put your stop and keep out of the way rather than putting a 5-pip stop. If you buy it here, you can put your stop under there and give it a wide berth in order to swing. And so, yes, I like the weekly charts very much for a lot of reasons. And then I typically look at a weekly chart, try and take a global view as to, so I'm just, again, trying to assess where is the big opportunity? Where is the big move? Where is a trajectory? I'm looking for things that move from one level to the other, whether it's, in the next 3 days, 3 weeks, 3 months. And so I want to kind of scale back and say, okay, what is the big picture? Yes, we had a scary sell-off today. It went from it sold off 200 pips. But in the context of this thing's come from 188 to 202 in a straight shot. So it's gone up 1,400 pips. So for it to take a 200 pip sabbatical is no big deal. But if you're looking at this on a 15-minute chart, it looks very scary. So yes, I think the weekly charts slow it down, and you can see the forest for the trees and set up your trades that way. So Mohammed says, I like you, I've followed you from 2019. I've learned much from you, Mohammed. I don't know if you're the same one. I don't know if you're still short the indexes, but if you are, I think you'll get some relief. I get a feeling that these indexes are coming down. So one of the markets that I told you I was looking at, as a proxy. So sometimes I look at different markets, just to get a different look, a different feel, a different, vibe. So this is the IGV. And this is the tech and software ETF. So tech and software are a major part of the market. And to me, this is the governing pattern. So yes, you've had a very spirited, rally here, but I don't think that it'll continue. Now, it could continue into this week. It could continue into next week. We could close high. We could continue higher, and then it could collapse. So, it's hard to handicap that, but I do think that we're going to go down. So it's my thinking that this is exactly what I said on Monday to our group when IGV closed here on Friday. I said it's likely we're going to go lower and then retest this supporting neck, lower thing, and then when you get to this thing, you can just open up and short it, and I think that you'll see this thing go lower. So it's my expectation that I think this rally's run its course. To me, this is just a short covering rally, and I think we go back down. Ason says, what about the Dixie, which is the dollar index? The dollar index kind of tapped out today. I kind of thought the dollar index would kind of come and re-challenge the lower end of this trend line. But I do think, potentially the dollar index is looking like it could roll over here. So you can see we're right at the support line. And I had a feeling we would retreat here, but I don't think that this is a buy. I don't think it's going to support here. Any bounce from here is likely to be short-lived. Because again, if you look at the dominant trend in the dollar, what we see here is, to me, this is the major pattern. So sometimes there's a tug of war between two patterns. So we had this major head and shoulders price pattern in the heart of the pandemic, and to my mind, this is really the pattern that's dictating this thing. So you can see we have this perfectly looks like a man or woman's left shoulder head. So that, and you can see we basically rallied right to the breakout point, right? So sometimes these things will break out, retest the breakout, and then go back down. And it feels like that's what's going to occur. So, when you broke out, you came all the way down, and then you put on another pattern. So sometimes you have what I call counter trend trades, where I will take, I think the directional trade, the long-term trade is lower in the dollar, but you can see for months and months, the dollar went higher. So, I will take these trades. There's a lot of money to be made, on these counter trend trades. One of my biggest trades last year was where I bought Beyond Meat, which is a stock that's gone straight down. But, it had one of these and, I bought it and then, drifted all the way back down. So counter trend trades can be very powerful. And this looks like a counter trend trade where you've kind of been in this channel here. And now I think it looks like you're going to leak to the downside. So I would probably buy the Australian dollar versus the US dollar. So this is the Aussie versus the US. This is a weekly chart. And you can see this funky inverted head and shoulders. So I think this is kind of the governing pattern. And then we basically came right back down, to the breakout area here. And now it looks like you're kind of going to turn back. So I like Australian versus US. I think it's, kind of bottoming here. And so I think it's slowly turning this ship around. I can imagine the pound versus US looks pretty bullish too. So I would, I like the pound versus a lot of these trades. I like the pound versus yen, pound versus New Zealand dollar. And you can see this giant, double bottom here and this bear trap. So you can see it broke through these major lows in the heart of the pandemic, and anybody chasing those lows, is stuck. And so, this is a combination bear trap and, very bullish. So you can see this is the W. We had this neckline here. You basically broke out, pulled back to the neckline, and now you're going back in the direction. So I like pound versus US probably better than anything else. You can see it's broken out also on this short-term downtrend. So I like buying pound versus US dollar. So Chi, I think the New Zealand dollar is the weakest. So of all the dollar trades, I would probably go with pound US. I would go with this one. I would just buy this here, put your stop loss there. That's your risk. And this thing probably goes and makes a new high. So what is the buy call for tomorrow? So tomorrow, what am I doing? So I'm short Roblox, short Roku. I'm short the indexes. I went home short the NASDAQ. It may be early. You may just have an open morning. I would sell into a higher opening in the NASDAQ. I think that, it's run, this is just to me a short covering rally. And I think we come down. So, kind of playing the indexes has been very difficult. You can see it's been very whippy. It's been easier to play these individual stocks, but I think that this rally feels like it's going to run out of steam. I also went home short the Dow. So the Dow looks like a bit of a bull trap too, where kind of broke above this high. And, these guys are trapped right now. Anybody who chased that high is now, got lower prices. So, this Dow is kind of going on this thing. I would, kind of wait for break of cadence here. So I just get the feeling that these indexes have, certainly the NASDAQ, and the real garbage is the IWM. This is the small cap. And it's been going nowhere fast. And I think that it's had a lot of volatility for no payoff. And I think this thing goes lower. So any break of this 210 is going to open up I think a nice move lower in the IWM. So I'm, mainly I'm short indexes, short Roku, short Roblox, long BABA. And it sounds like pretty good for now. So you can, what I'm doing, because the markets are so choppy and so volatile. The things are so extreme that, I kind of look for a setup, high probability setup. Like I saw JD the other day and I got a, 500% move on my options, and then I just put that, away. Then, today I got a thrust in BABA, put some of that away. So I just kind of look for these areas where I can put on trades, get these thrusts, and, take these moves. It's hard to stick around for the bigger moves because, the market is really in this very choppy phase where every day is the opposite of the other. So, I've just been looking to be opportunistic, but certain things like, Roku, is going straight down. There is no bounces. It's just gone straight down, even though the markets have been kind of gone to new highs. Roku hasn't even been able to bounce. So I just play these opportunistic setups where I can, get a foothold, where I can short something here. I can understand that's my risk. And, Roku, could go to the next level now, peel off another $20 very easily off this price. ARC, which is a proxy for all of the garbage on the internet. This is this woman, Kathy Woods. I've been saying she's a fraud since last year. And she hypes these things tremendously. A lot of millennials trusted her because she did well in a bull market. Anybody can do well in a bull market. So, as Warren Buffett says, when the tide, goes out, we find out who's not wearing a swimming suit. And so, I think a lot of people are going to be exposed. We've had a 10-year bull market now. We've had a whole generation of money managers who've never seen a bear market. And so this is the ARK fund, ARKK. It has stocks like Palantir and even Tesla and all of these very, very high growth speculative stocks that Kathy Wood says these are the disruptors of the future. These are going to, change our future and what have you. Yeah, she's going to change your future by making you a lot poorer. And, I was saying all the way back here that this is a monster sell. So, this is like trading for dummies. So we see a pattern. And even though that was, whatever, a year ago, this has been directing traffic in this stock ever since then. So this is why I say, you've got to trust the pattern, like the pound New Zealand. It looks very, turbulent, but the pattern eventually gets you to where you want to go. So even though this was a bear pattern, you can see that there are whole bunches of times where, it gives you, false look like pound New Zealand, where you feel very uncomfortable, holding a short position, but eventually, it cuts and runs. And so the pattern, tells you what you need to do. So the pattern all the way a year ago told me that this thing was going to go lower. I've been telling my wife, who, loves all of these, she loves Kathy Woods and all that. I said, this woman's a fraud. Because it's like a pump and dump. She will really give people an inflated feel for the stock she owns and where it's going. And people who don't understand, she's very credible, but she's, to me, one of the biggest frauds, and will be proven so. You can see the head and shoulders here, the rolling top here. We made a new, low. So when this thing broke here, this is when it was over, right? So it broke out here and then, tested this thing. And then when it rolled and made a new low, it's over. So you can see same thing here. We broke here, tested this, and now we're going to go back down here. So this is really an indicator. This is, a lot of what the NASDAQ. So the indexes are very different than the NASDAQ. You see a lot of crap stocks that look like this. In the meantime, the indexes look like that. So it's you have to understand it's a completely different game. Just because the indexes are up, today or tomorrow doesn't mean that this thing's not going down tremendously. I think this thing gets cut in half from here. Chris is viewing the chart in line or area easy for beginners like myself to. So again, to my mind, these patterns, here's the left shoulder, the peak is the head. And, look, I've been doing this for a long time, and I can just see these things in my sleep. I can open up a chart, wake up and go, whoa, I got to sell that or buy that. I can just see it. So obviously, like anything else, if you, woke up tomorrow and knew what you were doing, I'd be pissed off because it took me 40 years to figure this out. But it's not that difficult, really not that difficult. Here's another Head and Shoulders. So, here's the double top, so here's kind of the descending wedge. So there's thousands of patterns I see all the time, but sometimes this is just if I said to a 6-year-old, what is the trend in this thing? Is this thing going up or down? And sometimes, a 6-year-old, they don't have, all of the baggage that we do, and you can just see it clearly. So the whole thing is just to see it objectively. What I try and do is, if I open up a chart like this or any chart, the first thing I say to myself, and these are really the 4 steps of my trading plan, which, like I said, I have a book. It's a pay what you want. So pay $1, $5, whatever you want, 20. But it has, all of this information in there. There's 4 steps. So if I open up a chart like this, doesn't matter what this is, Japanese yen, corn, natural gas, I say to myself, okay, what is the phase or the direction of this market? So I think if I ask that to a 6-year-old, is this, going up or down? You'd say this is a downtrending market, right? And so, by and large, you want to get in step with the trend. Now, trends do end, and when they end, they have a pattern, but there's no buying pattern here. It's just the opposite. So then I say, okay, the first thing I say is, what is the phase or the direction of this thing? It's clearly a down. Is there a historical, pattern? Is there a historical precedent? Well, yes, there are a number of chart patterns that tell me that this is a bear. You can see the descending wedge here. You can see the Head and Shoulders here. So there are 100 patterns on the way down here. And then once I understand, okay, the charts are negative, the patterns are negative. Now I try and find a day where I can join that trade. So sometimes, it gets a little bit messy, and your risk reward is, not that easy. But then sometimes a day like today, here you go. You made a new high, close on the low in the direction of the trend. So now, I would say this is a great risk reward trade where you know where to join this trade. So you just put a sell stop there. You put your stop loss here. And so you've got a $6 risk to make whatever, $40. So, and then once again, so it's a layered 4-step entry. One, what is the phase or the direction? 2, is there a pattern? 3, is there an insurance day bar? And 4, I layer it with an execution where I put my sell stop, under the low, and I let the market confirm me. And ideally what this thing will do is open higher tomorrow to come back and hit me, and then, just take me with it. So it's a 4-step plan to get in step with a high reward versus risk opportunity. And what I try and do is find trades where my reward, my outcome is 2 to 3 times my risk. So if I've got a $5 risk here, I ask myself, can I see my way to making $15 on this trade? Can I see it going to $70? And I can. So, if you can set up your trades, where you risk 5 and you make 15, you will make a lot of money. Doesn't matter if you lose. You can actually lose 72% of your trades if you've got a 3-to-1 risk reward. So you can see I made 500% on JD yesterday. I've made a bunch of money on BABA. And so if I, lose on the next half a dozen trades, I still won't give back what I made on, 1 or 2 trades. So it's all about the quality. Shanair says, do you use the trailing stop? Yes. I'll get in here, and then if it goes here, but I won't, if I really, it really depends. Each trade has its own vision. I've said, up here, I thought this was going to be a $70 stock. When Beyond Meat was $200, I thought it would go to $30. And so, it depends on your view of where something's going, how you want to trail it. You don't want to trail it so close that you choke it off. Jeffrey said, is there a printed edition? So, this is an online PDF that you just download, Jeffrey, and I'll give that out in a minute. Let's see. Johanna says, on the chart you have open, I can see many head and shoulders, W patterns. How do you see what is the valid pattern? What is a fake pattern? That is a very good question. And as a trader, we're always faced and confronted with which one is the governing pattern. And, sometimes like roadblocks and this, I can see it. So I can see, that so this is like trading for dummies. This is my cheat sheet. So this is like Zoom, when Zoom was $500 and Zoom looked like all like this. And I said, this is going to whatever, $100, and now it's 170 from 500. And so to me, this is like trading for dummies. This is your cheat sheet. So, whenever this thing rallies, you just bang it, and but along the way, you will get what I call counter trend opportunities where you can take this the other way. I mean, something doesn't go straight down. You can take, so right here, you say, okay, well, wow, Mark, isn't this a double bottom? And this is where, if you don't have the experience, you can run into a bit of a thing. But again, my whole thing is, if something has topped, it doesn't just go here and then bottom. It's either topped or bottom. It's one of the two. And to my mind, this is the governing pattern. And here you see another double bottom. And I will play that. When I see a little area where it looks like it stopped going down, I will take this higher all the way, knowing that we're still in a downtrend. And then once it peters out, I'll get back on the horse again and take it the other way. So there's all kinds of times where you go, oh, so isn't this a double bottom then? Well, no, because that's telling you what the real operating pattern is. So that's a good question, and there's no easy way to answer that. Sometimes I still run into trouble where you go, which is the pattern here? And I think JD was the real consummate example of that, where I was, here was a conflict of two patterns. So last week, when this was, cratering down here like this, it was a very open question as, is this, because here is, a very nice looking head and shoulders. You have the neckline. And, for a while, it did, give you a ride out of that head and shoulders. But to my mind, it wasn't the governing pattern. It may turn out to be. I mean, this one is confusing because you have a head and shoulders here. You have a head and shoulders there, and then you have a double bottom or an even, and so now this is something where you run into a bit of a conflict. And, I just surmised that, that this thing came exactly, to the low of this line. It just hit this line so many times. And I just figured we were going to get a bounce. And in my mind, I drew that pattern. So I think that this will turn out to be the governing pattern. But this is a chart, forgot to answer that question, where you really see the conflicts, where you're thrown a number of different things. And guess what? If you're not sure, don't play. I was, sure as a heart attack when I got into this thing. I was sure, of BABA. I was sure of Uber when I got in. So, if I can pick an area where I have a warm and fuzzy, I'll play it. If you're, in an area where you just can't sort it out, Just leave it alone and go and find something that is clear. So, this to me is the greatest example of, very, what the freak is this going to do? I think it will resolve itself to the upside, but, we'll see. So when I'm unclear, this is when I'll toggle back to, bigger time frames. I might start with the monthly, to see, okay, what is there anything that stands out here? So you can see on the monthly, we have this huge key reversals right here at these lows. Made a new low, closed on the high, made a new low, and well, we're still in the middle of the month. We'll have to see where this closes. Still a little bit ambiguous because, this could also be a double top. So is this the double bottom or is that the double top? And, it's very tricky in here, but I think that you hit a bottom, and I played it, made 200 grand. And, but this is an example where it gets a bit tricky, where, you got to kind of sort it out. And to me, it becomes somewhat simplified because sometimes the market actually points in the direction it wants to go. And what I mean by point is that I look at the price action, made a new low, close at the high. So it's kind of pointing higher, made a new low, close at the high. So even though this is red, it closed red, you can see it closed right at the high of last week, and it pointed in the direction it wanted to go. So, these reversals, this is why I look at a combination of the patterns and the price action. So you can see this is also an even atom double bottom right here. So you have one bottom, which comprises of a number of hits at this support, and this is a single. So this is still tricky on the weekly and the monthly. So you can, here's the head and shoulders, here's a head and shoulders, but here's a double bottom. And now you got to say, okay, which way is up on this thing? And so not clear, but I took a shot, and, I think this thing's going to go higher. So this is a great example of where prices, but, sometimes, we get all kinds of patterns, and I then, to me, it's not ambiguous. It's not ambiguous where this was going, despite the fact that you had a whole bunch of rallies. So this is Zoom on the weekly. Whoa. And so it all starts off with a central premise. And to me, this head and shoulders here, or certainly this double top here, was, just like ARC, told me that this thing was going to be where it is today. And you had another double top here, you had another double top here, and, you kind of had a head and shoulders in here. So now you got this kind of, so this, was unambiguous to me. This, threw you some patterns. You had, a thing here where, is this a double bottom here? Where you have things here, on and on. So, but this was, you have a key reversal here, and again, you got a pivot off there, and I will play that counter trend play, but knowing that the major trend is lower, and that's on the weekly. And so on the daily, you can see that, sometimes you're given all of these things where, is this the double bottom? And yes, it bounced off there, but the direction was always lower. So I hope that answered that question. AJ, does the governing pattern often have an extreme top or bottom? Yeah, it does. But then there's this, a set of what intermediate patterns. So you can see here was a double top right here, which was an intermediate pattern. So if you go all the way back, you see it on the weekly, but let me just kind of put it here and see if we can see it here. So yeah, the governing pattern, by definition, it kind of, this is the gun that fired it. So you can see you had a combination here. You had the double top and then the head and shoulders. And so this right here governed everything that happened thereafter. Now you get major short covering rallies. Sometimes you break out and you get these major, whiplashes. And this is what's going to happen. This is what happened this week. That's what I think this week was. We went lower. We've gone higher 3 days in a row, major whiplash. And then I think we go back down. So you kind of got to keep your eye on the prize. You got to know what is governing it, because you can get all kinds of counter trend moves, but you got to understand what is really governing or dictating this thing. So here it was another double top here, which then sent this thing lower. Then you had another move higher. Then you had another double top here, sent it lower. Then you had another double top there, and on it goes. So, and then, this thing really had a long-term descending wedge triangle that really confirmed the whole thing right there. Once it broke there, now it was gone. And that $240 stock is now going to be a $100 stock. We're at 170. This thing will be in the low 100s by the time it's all over. Probably lower than $100. So I use Zoom to talk to you guys. It's a beautiful service, but it has nothing to do with the value of the stock. So one says, what stocks are, to look for tomorrow? So, I'm short the triple Qs, which, sometimes it's just easier to short the whole index than to find an individual stock. It hasn't really been the case, because the indexes have been kind of masking, and, the index has been going higher while these crap stocks have been going lower. But I'm short the triple Qs. I'm short the Dow. I'm short Roblox and Roku. So you can see Roku's going all the way down, and then Roblox, is a little bit more funky, but I think it's in an area. I just bought the puts right on the close. I paid a lot of money for them, so they better pay. I've got 2 days until they expire. So, but I think you can short the stock of Roblox. So all of these trash stocks, Zoom, Peloton, Beyond Meat, that have kind of run up in the last 3 days, you can short them all. All right, guys, what I'm going to do now is, so somebody asked me about, how do I find stocks? So, here is this thing called FinViz. I showed it to you yesterday. I don't want to put too many links in here, but somebody asked me that. And so this is a great thing. You go to a screener and you can, go to the NASDAQ, go to a sector. You want to look at consumer defensive. You want to look at, size, mid-size, what have you. And then it just gives you all of these things to look at. It's pretty cool. And then you just see the charts here, and you can go down very quickly, and I can just visually see if there's something that stands out. Now I'm going to give you a link to my book here. So I'm going to put this link. Dwight, can you put this link in the YouTube?
Yeah, sure, no problem.
Thanks, man. Yeah, I don't have YouTube up here, so I can't see their questions. I don't know, Dwight, if there's any questions that come off YouTube that you see. So this is basically my 5-step trading execution plan. So I laid it out very quickly, but this will give you a very detailed look. And the nice thing is, it's exactly what it says. There's no fancy price here. It's pay what you want. You basically enter your price here. So $10, $5, $100, whatever value you want to get out of it, feel like karma is. And then what I do is I take that amount and I double it. So I personally double whatever you send. So you send me $10, I then send $20 on your behalf to the American Childhood Cancer Organization. I donated over $34,000 to them last year. And this is my way of giving back. So whatever you pay, I actually lose because I match that and double it and send that in. So you know that A, you're getting great value. I think you'll learn something out of this book. And then B, you know your funds are going to a great cause. So John says Mark's book is a must-have. So thanks for that, John. John's a long-term member. So I'm not selling anything here. Brad says, what's the difference between this course and the other course you're selling? So, I think you'll notice that this is a promotion-free webinar. This is all free. Everyone, I think is always expecting to get hit over the head with some promotion. That's not what I do. I try and impart the information. You can lead a horse to water, but you can't make him drink. If you like what you see and you want to go the next step, our team will get in touch with you. And we have something called the Elite Program. I'm not going to spend a lot of time. That's basically where you get my emails every single day. 2 days ago was Uber, yesterday was Baba, and I just made our members a ton of money. Bought Netflix at the low last year. I've just really kind of hit it out of the park. We actually did a track record, and our team was actually reticent to put it out because it was so good. If you'd taken all of the trades, you would have made. Wynn says, do you trade options? I trade options very actively. I think I showed you how I made 180 grand yesterday in JD options. So you can see here were these options in JD.com. I bought them for $1.15, $1.20, and blew them out for $3.75 and $3.60. In this account, I blew some out for $4.25. They eventually went to about 6 or 7. Like if I hang in there, I could have doubled that. But yeah, I actively trade options. Options are a very leveraged bet, but you have to be willing to sacrifice, everything you put in the middle with an option. So it's very risky. That's why I look for plays where, if I bet $1, I'm looking to make 4. So if I can make 3 to 1, 4 to 1, on, certain plays, that pays for all the crap plays where I lose 50% very quickly. Joe, you're welcome. Great to see that you're still on board here. Godwin says, do you advise using micros for a start? So yeah, if you have obviously smaller account size, don't try and start hitting it out of the park right away, right? The tortoise wins the race. And so I'm kind of looking at these triple Qs right here. This is in the aftermarket. These are actually still actively trading. This went to about 388, when we first got on about an hour ago, and now it's drifting lower. So I do expect that the triple Qs are going to start going lower. So you can see these are all the things I follow. Here's Baba today. It was up $5.22, up 4%. Yesterday I said to buy it at 132. I bought it at 132 at least. So Stephen has been asked me to look at APPS, so I'll look at APPS. Probably just some scam. I know it's a digital turbine, all these EV plays and, solar and energy and what have you. These are the Kathy Woods plays, and, I think they're just going to end in dust. So this is APPS, and, it just tells me that it's probably going to go down huge. Probably going to get cut in half from here. So you can just see collectively, the double top here, and it's just sitting on this, neckline. And, once it, hits this thing, I can imagine it's going to just get detonated. So don't fall for stories. Don't get involved in stories. All these analysts and people, they give you the reasons why everything, is going to, and it sounds so reasonable. These people are so intelligent. They're so articulate, and you read them and it's so, compelling. And it's so funny. I'll look at these analysts on TV all day long. They're so erudite. They're so articulate. They make such a compelling case. And then I look over the shoulder at the chart and I'm rushing to sell as much as I can. So don't listen to that. The market is the only thing you have to look at, and the market is always right. So when the market tells you this, just run. And somebody can give you a great explanation. I saw something on APPS. I saw some, a money market firm that says this is the next generation, whatever. And this is going to cut in half before it ever goes up. Chris says, could you explain Apple? So this is the divergence where, a lot of the speculative growth companies like Beyond Meat and Zoom that have no earnings obviously are in a whole separate category from Apple, which is, a great company with great earnings, the first company to ever hit a $3 trillion market cap. But you can see that, there is some resistance up here. So I don't know if this is a double top, but it looks like there are, just trying to clean this up here. So this looks a bit tricky here. It does look like there is some resistance. And so I would certainly watch this support line, wherever this is, about 169. We have a bit of a reversal today. So, I would watch this thing. If it comes through here, it could open up a move lower. So it is my expectation that we could have a huge move lower in the NASDAQ. So nothing will be spared, including Apple. So here's the long-term support line. So you could get a pullback to here, which looks like about 165. So I would watch that area for, either a rebound or a collapse. So like I said, the ETF to look at, for this whole thing to sort everything out, there's a lot of cross currents, is the IGV. So this is the tech software. This is entirely comprised of tech and software like Microsoft and Salesforce and Intuit. So to my mind, this is telling you a very negative story, very. So you can see here's the double top, here's the first Head and Shoulders. And so that was the beginning of the end up there. And then this whole thing is, here's the left shoulder, here's to me is the head, here's the right shoulder. And you can see that the right shoulder is sitting lower than the left. So it creates this downward sloping. So we saw with Roku, when something's downward sloping, not only is it bearish, but it tends to go that way very quickly. So you can see we had a key reversal today in the IGV. And this is why I'm surmising that this has been a dead cat bounce. We basically came to this support line, we bounced, and I think we go back down. So, if the market opens tomorrow higher, don't be fooled. I would actually sell into that. Yeah, so Keith, obviously Apple's in a separate category than Beyond Meat. So if you want to short something, short the crap, short Roblox, short Roku, short whatever, Apple could roll over, but it's not going to give you, the bump that, but here's the thing. So the indexes have been masking this thing because the mega cap stocks like Microsoft and Apple have been keeping the indexes high. But if, Microsoft and Apple start rolling over, then you'll see the rolling over in the indexes. And this is what the IGV is starting to tell you. So, everything is going to be taken with it. Nothing is going to be spared. So I expect these mega cap stocks to, you can see that Microsoft is looking like it's forming a top. So this is one of the most formidable companies, but it's, it looks like it formed a Head and Shoulders here. And then this whole thing looks like, triple top up here. And you kind of broke this neckline. And as you typically do when you break, you have some reflex thing back to the breakout area. And you can see today we have a reversal. And now it looks like it could go the other way. And, if Microsoft and Apple start rolling over, this is where you'll see the QQQs, the indexes roll over. So you can see this bounced, on Monday perfectly where it should. But the next attempt at this thing, I don't think you're going to get a handshake here. I think you're going to get that kind of action. All right, guys, thanks a ton. I had a long day. I hope you got a lot out of this thing. Download my book. It talks about all of these steps in greater detail. It's a pay what you want. And Steven says, I wish I found you around October. From then, till then I've ended up with $10,000, 10,000 pounds on credit card debt. So don't get into debt. That's the worst thing you can do. All right, guys, thanks a ton. We'll see you back tomorrow, 4:30 Eastern Standard Time. Thanks, Dwight.